A few years ago, I was traveling in a train from Moscow to St. Petersburg in the Russian winters, and I was reading a book, Rich Dad Poor Dad by Robert Kiyosaki. And that book, at that very moment in that train, it changed my life. Because that was the time that I decided to become a full-time entrepreneur and not continue a career in physics. But recently, I read the sequel of Rich Dad Poor Dad, Cashflow Quadrant by Robert Kiyosaki. And my views now of Robert Kiyosaki have changed. I wasn't really so interested to make a video about Robert Kiyosaki or his book, but there was one straw that broke the camel's back. And that's a sentence that I'm going to read right now. Today, many people blame the big banks, such as Goldman Sachs and JP Morgan, for the crisis. Yet, if anyone should be blamed for this crisis, it should be Warren Buffett. He is a smart man and he knew what he was doing. Moody's was blessing rotting dog meat as grade A prime beef. That is criminal. How can you blame Warren Buffett for the 2008 financial crisis? That's blasphemy. Warren Buffett doesn't monitor the day-to-day operations of his investments. That's something that if you are giving advices about investing, you should know. That's why I decided to make today's videos, because there are so many things, not just from this book, but from the teachings of Robert Kiyosaki himself that are just not right. They are wrong. They are wrong. And I believe that I should address that because this is a channel about investing, and I should address that because this is one of the most influential people in entrepreneurship, in investing in the world. He has influenced me, has changed my life, and I believe that he's changing the lives of so many people. The first thing that I want to discuss today is the conspiracy of the rich. It's not just Warren Buffett who is to be blamed for everything bad happening in the world. There is a rich people conspiracy. Right now when we are talking, Bill Gates, Warren Buffett, Michael Bloomberg, they are all having lunch together and discussing how they will keep poor people poor. The only way to liberate yourself from these people is to smash the like button for the algorithm and to subscribe and hit the notification bell so that you don't miss the next videos. It is true that the school system is not made for the 21st century. It is true that the school system was designed by the great capitalists, the great industrialists of the last century, such as Henry Ford, such as Andrew Carnegie, John D. Rockefeller, so that it could provide them with workers. That's why they designed the school system, because they needed workers. In the very past, in 500 years ago, only rich people were sending their children to school. If you were the son or daughter of a peasant, you will never go to school because you don't need a school education. But in the last century, school education was important because you needed to work in factories. That's why you see school children are still wearing uniforms. Because the only places where people wear uniforms are in the army and in factories. And people stand in line in school. It's because of the assembly line. So the school system was designed to form workers mostly, but today most people don't work in factories. So it's not designed for the 21st century. That doesn't mean that there is a conspiracy of the rich to keep people poor. The only reason why it's not changing is because it has become so big and complex. There's so many bureaucrats involved, so many people involved that it's hard to make any changes. That's why the school system is not evolving. And if you see in countries such as Finland, Norway, it's evolving. There are 5 million people in Finland. Of course, it will be easier there for the system to evolve. And all these people speak the same language. It is a homogeneous population. It will be easy there to do it. It's not that easy in the United States. That's why it's not a conspiracy of the rich. The second point I want to talk about is that savers are losers. This is something I totally agree with. Robert Kiyosaki said that if you are a saver, you are a loser because saving you money doesn't work. Because of inflation, you will actually lose your savings over time. I totally agree with him. But he equates savings to bonds. Yes, there are a relation between bonds and savings, which I won't go into details into this video. But that doesn't mean that bonds are just savings. If you are buying bonds, it means you are saving. When you're buying bonds, it is an investment because bonds, it pays you an interest. So it's an investment. A bond is a value producing asset. A bond, it has a fundamental value, a fundamental and intrinsic value. So it is an investment. It's not saving if you're buying bonds. And he said that things such as mortgage-backed securities, all these things are savings, and that's why people lost money in 2008. It's not true at all. It's not the reason why the market crashed in 2008. Yeah, there was a problem with mortgage-backed securities, with the CDOs, all these things, but it has nothing to do with saving money. And he says that instead of saving, you should invest in gold and Bitcoin, because by 2040, gold and Bitcoin will replace the US dollar. This will never happen. It will never happen. Maybe the dollar will weaken in the coming years because of the money printing going on. But sooner or later, they will stop the money printing, but the US dollar will remain here. Gold will not replace the US dollar, not in our age. And so far as Bitcoin is concerned, I don't think any of the cryptocurrencies in existence right now has the capability of replacing the US dollar. The next point is the one that really infuriated me. It is about the stock market. Because Robert Kiyosaki said that you should not invest in the 401k. It's a bad idea to invest in the stock market. The stock market is the largest Ponzi scheme in the world. And in page 243, he says something very interesting here, that you should cut your losses when the stock market is going down. This is a bad idea. When you buy a stock, it's because you're buying a business. It's not because the stock is down by 10% that you should cut your losses and invest somewhere else. He said that you should do this. And he said when the stock market is going up, some people take profit only by 10%, but they should be taking profit. They should not be so scared to think of the unknown, and they should let it rise. No, if it becomes of value, you sell. And when it's going down, you buy. So it's very bad advice. If you're going to look for advice in this book or from Rich Dad Poor Dad about stock investing, don't look for it. Don't look for it. It's bad. It is true that if you're going to invest in a 401k or other pension funds, there are fees and taxes, commissions that you should be careful about. It's true. It's true that there are people on Wall Street that are just taking your money. But the stock market is the best passive income source in the history of the world. It's not a good enough reason to tell people not to invest in the stock market. You should just be more careful about the fees and the commissions and the taxes. And he said that the alternative to stock investing is real estate and buying a franchise. I don't know much about real estate, so I cannot tell you how good or bad his advices are about real estate. But from what I have learned, in general, is that the advices he gives in his books about real estate, they don't apply anymore. These are old things, but that doesn't work anymore today. Today you need cash. You cannot do 100% debt financing to buy a property. Apparently it's not possible. I don't know. I don't live in the United States. I don't own any real estate in the United States. But in Rich Dad Poor Dad, he wrote that he did it. It was possible then. Will real estate or buying a franchise get you out of the rat race? Of course it will, but there is nothing wrong in being an employee. And this is one thing that I really don't like about Robert Kiyosaki, that he keeps polarizing the rich and the poor, that there is a combat between the rich versus the poor. It's like Karl Marx, there is this class conflict between the rich and the poor. It's not like this at all. You can love your job. You don't have to be an entrepreneur. I read the book Rich Dad Poor Dad and I became an entrepreneur, but most people should not be entrepreneurs. Most people should just be employed somewhere. You should not be taking that risk. Most people should not be taking so much risk. You can be a doctor, you can be a teacher, you can be a plumber, because we all need these people. Of course, maybe you won't be making that much money, but money is not everything in life. You can have a meaningful, a successful career as a doctor without making much money in your life. There's nothing bad in that, and you can always invest. Read that book. If you want to invest, you can do any profession and you can invest in the stock market. I totally recommend this book, Money Master the Game by Tony Robbins. There are great interviews from Ray Dalio, from many other great investors in this book. I highly recommend this. I'm still reading it. I will talk about it maybe in other videos. Robert Kiyosaki also has this game, Cashflow, that apparently teaches you about assets liabilities. Of course, it teaches you. It's in some ways better than Monopoly, but I still prefer Monopoly. It's because if you look at the game, the stock market looks like a sort of gamble. You just roll a dice, and then maybe your stocks will go up and go down. If people just learn about the stock market from this game, they will think that it's just a gamble, but actually that's not the case. But if you look at real estate is not a gamble at all in that game. Real estate is something serious in that game. If you look at buying a franchise, this is something serious in that game. And these are the best two ways to get you out of the rat race, because you need to build enough passive income to get out of the rat race. But in reality, you can have passive income from stocks, from dividends, but in the game, I've not seen dividends yet. To conclude, I will say that everybody should read Rich Dad Poor Dad. What about this Cashflow Quadrant? I think that he could have, it's not really such a good sequel. With 10 extra pages, he could have written everything in this book in Rich Dad Poor Dad. It would have been enough. There was no need to write another book on this. It's the same thing. He keeps telling you the same thing. And he has a new book that just came out, and I just go through some of the pages in the bookstore. I did not buy the book. I just go through some of the pages and I see the same thing, same language, fake teachers, fake assets, fake money, same thing. He keeps saying the same thing in all his new books. So I will only recommend people reading Rich Dad Poor Dad. I believe that this is a book that everybody should read. If you are an investor, if you are an entrepreneur, whether you are an employee, whether you are the richest man in the world, everybody should read Rich Dad Poor Dad. There's so much great things to learn from this book. Compared to this book, Rich Dad Poor Dad is actually a good book for children. This one is not a good book for children. If you give this to a child, they won't learn much. This is for someone who is 25, at least 25, even 20 years old, maybe can read this. But Rich Dad Poor Dad, if you are 10 years old, you can learn a lot of things from this. But that's it. It's just a general concept about the assets, liabilities, about investing. Don't use advice from Robert Kiyosaki or from Rich Dad Poor Dad or from any of his other books to go and invest in stocks. About real estate, I don't know. I'm not an expert. But don't use that to go and invest in stocks, because he gives you really bad advice about the stock market. So let me know in the comments if you read Rich Dad Poor Dad. If you did not read it, please read it. I highly recommend this book. It changed my life. But like I told you in the video, don't go beyond that. Thank you for watching this video. Please like, subscribe and share. Please watch these two videos, see if you have missed them. Have a nice day and goodbye.